As we get into 2023, there's a lot of uncertainty of 2022 that we seem to be carrying forward into the new year. The Russia-Ukraine conflict is still on. The rising China COVID cases is impacting the global commodity demand. The aggressive rate hikes from central banks and the US dollar moves have all impacted the asset classes. But what are the signs that you need to watch as you make your portfolio allocations in the new year is what we will discuss with our top names in the industry today. Hello and welcome to Commodity Champions, and we will discuss about commodities on how you need to trade them in 2023. I'm Manisha Gupta, and joining me on the show is Ole Hansen. He's head of commodity strategy at Saxobank. Ole, hi, always a pleasure to have you on CNBC-TV18 India. I want to start with what we really have seen in 2022 in sense of commodities, where we saw all-time highs, multi-year highs, and then the prices declining 40 to 50% from those kind of levels, and then the 8 to 10% of a gain from those lows as well. It has been a volatile year. Is that one of the things that we are carrying forward into 2023?
Good afternoon, Manisha. Yes, absolutely. We have multiple uncertainties as we start 23. And that will drive some continued volatility. But 22 has most certainly been a year where commodities has made you can call it a comeback in terms of how it's being perceived by consumers and people around the world, because it's suddenly become a year where we've become accustomed to the fact that we have tight supplies in several key commodities, and that creates this volatility spikes that we're seeing. So more of that to come in the start of the new year, and obviously in the short term, as you mentioned, the focus will still be on the war in Ukraine, but probably more importantly, what's the short-term developments in China.
Ole, sometime in 2020 and 21, there was a conversation about a bull cycle perhaps in commodities. How do you see as we end this year?
I think the bull cycle is still very much in play. We have seen a correction during the past few months here, and I think primarily the correction has been driven by the developments in China, where we simply have the recovery from the COVID lockdowns has been delayed by many months, and now we are still looking probably for another 1 to 3 months delay as well. The dollar was a major development as well this year, and probably most importantly the rapid rise in interest rates that we've seen across the world, also having in the latter part a somewhat negative impact, given the prospect for it driving some economies potentially into a recession next year. But I think the supply outlook, and that's where we could see an interesting year next year, that the supply outlook remains tight for many commodities, and that basically means even if we should have an economic slowdown, then the supply situation will equally also be important, and that could see that could drive some of these key commodities to higher levels.
And what are these key commodities that you see? Is it food, or do you think the industrial commodities could see some support as well?
I certainly don't hope that it's going to be the food side of the equation. That obviously depends very much on the weather. We do know that we're entering 23 with the lower stock levels than we entered 22. That obviously leaves us more exposed with regards to any adverse weather developments next year. But I think where our main focus is probably primarily on the metal space, both industrial and precious metals. We are seeing a recovery eventually in China. There's no doubt they need to get the growth back on track, and that will be commodity intensive, but more selective than we've seen in the past. They're not just going to go out and build new cities that no one wants to live in. So it's potentially not steel and concrete that we're going to look at. It's more the industrial metals we're used towards the infrastructure and the energy transition that will be in play. And on the precious metals, we've had a phenomenal year, I would say, in gold and silver. Gold especially, it's unchanged in the year in dollar. In a year where we've seen a rapid rise in the dollar, we've seen the biggest jump in bond yields in decades. And despite of these developments, gold is almost finished in the year, close to unchanged, perhaps even with a small plus. And what happens in next year when we start to see the dollar reverse some of its strength? We see eventually that interest rate stops rising, and more importantly, that inflation does not come down to the level that the market is currently pricing in. These are basically our reasons for maintaining a bullish outlook for gold, and with that also silver next year.
We'll have to talk to you about the Saxobank report about $3,000 per ounce in case of gold. How have you seen that report? What's your own sense?
Well, it's part of our annual exercise of trying to come up with 10 outrageous predictions. The developments that we don't see happen, but at the same time, if they do happen, it obviously has a major impact on markets and the way we look at markets. And the $3,000 call for gold is not because we're actually seeing gold down. We are bullish on gold next year, but obviously for $3,000 to be reached, a lot of things has to be aligned at the same time. But it is building on the assumption that central banks will eventually lose control with their inflation fighting abilities, simply because the economic outlook slows to the extent that they'll have to reverse some of their focus there. And just simply some of the inflation that's coming into the system is structural. It's like getting a genie out of the bottle. Once it's out of the bottle, it's very difficult to put it back in again. And that basically means that inflation will not come down to 2.5% anytime soon. And when we start to get that realignment, we could also see a realignment in prices for some of the metals, especially gold. So yeah, it's an outrageous call. Some have said, well, it's not that outrageous, but I think just looking at the price it has to travel to reach that level, it is quite a significant jump, which we don't have as our base case. But still, I wouldn't be surprised if we potentially could see a record high next year.
Let me push you for some of these price outlooks as well. So outrageous, yes, that done with. What's your sense on what are we looking at as in sense of range for gold and silver for the new year?
Well, we're trading just above 1,800 this morning. It's doing quite well, considering the news from Bank of Japan overnight, which has sent bond yields higher and the dollar lower. So it does indicate that right now the main focus in the market is the dollar. So that obviously will be the key driver next year. But I see gold move, as I said, back towards 2,000 in the near term, with silver potentially getting some additional tailwind from industrial metals, keeping a close eye on copper in that regard. Copper potentially could even do better than that. So that could potentially take it up towards the 30 level.
Okay, and since you are looking at copper as another gainer in the next year, what's your sense on prices there?
Well, the market has been lukewarm on copper in 23, just simply from the fact that we know there will be additional mining supply come on stream next year. Some of those has actually already started to be lowered, or projections started to be lowered. And then right now we're looking at a situation in Panama where the government is forcing the mining company in charge to either pay higher taxes or leave the site. That is basically 1.5% of global mine supply. That is supply we most certainly can't live without next year. So with the transformation, looking at what's happening in Europe and in Asia, with the transformation is gathering pace, and it will require a lot of copper. So we remain positive on the outlook for copper and could see a record high, not in 24, but perhaps already next year.
All right, a record high in case of copper prices as well. And what's your sense on energy? Because we've seen this week also come out in sense of European Union agreeing for a gas price cap as well in the month of Feb. How will all this pan out, and any price views that you would have for energy?
Well, gas price in Europe has returned to the €100 mark. We were just briefly above 130 as the cold spell set in. I'm wearing a jumper because it is cold in Scandinavia. We're keeping the temperatures low in order to preserve energy. But so far, the crisis, the gas price this winter is over. We're not going to have a crisis. The inventory levels are so high that we have more than a month worth of peak demand just in storage relative to what we had at this time last year. But the worries are obviously still for the coming winter, the next winter. But I think as well, if we do get a solution to the situation in Ukraine, which obviously is a very big if at this point in time, if we do get a solution, we will also see increased flows of gas coming back to Europe. Not at the degree that we saw in the past, but obviously they will probably send more gas. So I'm quietly confident that we will see the situation continue to stabilize. If we look at the energy markets for fossil fuels in general, crude oil prices probably has found a bottom, I think, at this point. SPR refilling in the US, OPEC Plus keeping a close eye on prices and potentially stand ready to cut production if needed. I think it has created a soft floor under the market. Are we going to see a return to above 100? I doubt that in the short to medium term. Once we get through the lockdowns or the virus outbreaks in China, I think we could see a return to the $90 to $100 area, and that's probably where I'd like to see it trade most of the time next year. But obviously, again, forecasting oil prices is extremely difficult. Just looking at what kind of moves we had so far this year.
Well, I understand that is going to be, as we've seen in 2022, the price bets came in earlier than expected or didn't come at all. And that kind of uncertainty is what we are getting into 2023 as well. But thank you so much, Ole, for joining us and giving us a sense on all of those commodities and what to expect in the new year 2023. On that note, let's take a short break. We will be joined by Edward Morse, Managing Director and Head of Commodities Research at Citi, with his view as well on 2023 outlook on commodities.
Now, QCI has launched a market